share some strategy. We will, don't worry. The bootcamp is not over yet. It's not over yet. Yes. All yeses. Option buying. We'll get to it. All right, perfect. Everybody can hear me. Let's get this session started. Hey everyone, I am Akshay Mantri and I welcome you to the day 5 of the 7-day stock market bootcamp by one and only Money Ball. All right, let's get this session started with a quick poll as usual on your screens now. Same question, but this time rate the Pro League and the Major League, the two videos that you watched, the two previous videos that you watched. Awesome hairstyle, looking smart, sir. Thanks. You'll know why. You'll know why soon. Damn funny. That was funny. Come on, switch on your cameras, everyone. Show me your faces. Come on. Interesting. See? Important resistance. I would want to wait and see what. Yeah, majority 8. Perfect. Brilliant. Stop sharing. Done. Make sure to submit your daily tasks on the Facebook group for certification as usual. Okay. There will be a bonus at the end of this session, not as usual. There's going to be a bonus at the end of this session, so make sure you stick around till the end. All right, let's head straight to Slido for our Q&A, for which I'm going to chat box off. There will be recording of today's Q&A, right? Yes, there will be. Yes. Hold on. Major League could be more better than the other ones. Oh, I'm so sorry, man. I tried my best. I tried to make it very simple, very simple, because a lot of you might be new. Try to make it very simple. But okay, I'll take that advice from that. I'll try to make it better. All right, let's get started. Why we should wait for selling opportunity when market is bullish, vice versa bearish. As you replay the chart, market was bullish, you wait for selling opportunity. Okay, I get it. See, for example, let's take the latest example, this entire region here. You're seeing that the prices have taken resistance again and again here, again here. Twice it has taken resistance, and this resistance is after a very nice pump. Consider always this. Do not get stuck in your daily trends. That is the reason why I say utilize different time frames. Zoom out, have a bigger picture out of your sight, but never out of your mind. You should know where exactly you're placed. So this is happening after a very nice pump. So there will definitely expect some covering, some long position unwinding expected. All the people who had bought, it's a very nice pump. They will start booking. A lot of them will start booking profits who don't have that strong conviction that the prices will still go higher. They will start booking profits. And now I see signs of resistance. I'm definitely going to consider that. And then when it opens here, though it has taken beautiful support near the previous support itself, it has taken support. And I see strong bullish candle here. It's in a bullish move as of now. If you consider only this, that doesn't mean I want to go long directly here. It's very close to a very important resistance. I would want to wait and see what the candlestick behavior is happening. What's the kind of behavior that is price action happening at that particular place. I always tell you see it last class also. Right type of candles at the right place. You need to be looking for that. Just because it's going higher right now doesn't mean that I can jump into buy trade. I know where exactly am I placed. Prices are trying to take resistance. I need to wait. Okay, I need to wait. That is exactly why I told you that, having a sense of direction also is not your complete analysis. I can see the price is going higher. Yes, it's an uptrend. I can just buy. No, absolutely no. There is so much more than it. To understand where exactly you're placed, which should you give more preference to, support, resistance. Every day the prices will go. You see, it came back down. It'll try to go back up. It'll come back down. So yeah, when it comes back from here, it's coming from a resistance. When it's making the small retracement, it's going from a support. Doesn't mean that it's as soon as it's a support, I can become a buyer. No, Absolutely no, right? Every time the market makes a move is from a support or resistance, obviously, which to give more preference to. That is why you wait precisely, patiently for those opportunities, right? Good, good. I hope you get it now. Done. What is CPR? Is it important? Please show how to use it. This was a great session about indicators. This bootcamp is going to be life changing. Oh, great! I feel you feel that way, man. Coming. What is CPR? Cardiopulmonary resuscitation. Okay, is it important? Very, very, very important if you want to save someone's life. Okay, please show how to use it. I can't show you how to use it, but I'll tell you how to do it. Okay, it's usually you use this when some person's airway is blocked. Okay, when someone's airway is blocked, his lungs are blocked, or he's just drowned and there is water filled in his lungs. So you perform this by giving chest compressions, and you give mouth to mouth air, you blow air, you give chest compressions. That is what CPR is. Now, obviously, you didn't want to know that. Not like you didn't want to know. It's a very important thing, a very interesting that everybody should be aware of. But yeah, obviously, you are not trying to ask me that. What you wanted to know was PCR. Okay, not CPR, PCR. Put call ratio. That is what you wanted to know. But, okay, what is put call ratio? Basically, total OI of calls divided by total OI of puts. That is why I think you called it as CPR, because it's actually calls divided by puts. That is why you put calls first. But since CPR is a very other thing, well-known thing, that is why they would have kept it as PCR, though it is actually call put ratio. So what CPR basically is that total OI of calls divided by total OI of puts. Now you know what OI is when after you watch that video. The number of active orders. The number of active orders, outstanding orders currently in that particular contract. Outstanding, they have been opened, people are still in that trade, they haven't closed it yet. Active orders, right? That is your OI. So the total OI of calls divided by total OI of puts gives you that ratio, a number. If that number is greater than 1, that means there were more calls, right? There were more calls. That is why the number is greater than 1. If there are more calls, we are assuming it's a bullish trend. More number of calls. Why would people buy calls? They're expecting the prices to go higher. That is why if everybody is thinking of buying calls, most probably it is in an uptrend. It's a bullish trend. Number greater, PCR ratio greater than 1, bullish trend. Lesser than 1, that means there are more puts. Hence, expect a bearish trend. That is how you use your PCR, not CPR. Okay, good. But you got to learn something which you didn't even ask for. CPR. What is CPR? What's the risk to reward ratio between choosing as a trader and being in the job? Crazy. Okay, what's the risk to reward ratio between choosing as a trader and being in a job? See, to become a trader, there is definitely a lot of risk involved. Okay, definitely there is a risk involved. But since you're asking me about risk to reward ratio, bigger the risk, bigger the reward. Okay, there's a greater risk here. Definitely, there's a greater risk here. But if you get to know how this works, if you really become consistent, there is nothing like it. There is no other business in the world that can make you return so quickly like trading. Okay, not even investing, trading. There is nothing can beat this. The kind of returns that you can make is brilliant, out of this world. Unbelievable. So yeah, risk to reward ratio, greater the risk, greater the reward too. When it comes to a job, lesser risk, lesser reward. Same thing. In trading, there's greater risk, greater reward. In job, there is lesser risk, there is lesser reward also. But there is some sort of safety and security that you feel in a job, right? That is the only thing that you have some sort of safety and security psychologically, but which comes with a very different kind of expense. To be very honest, jobs are like modern slavery, man. Sorry to say this, but that is exactly what it is. Modern slavery psychologically, to make you feel secure, and that you're secured, safety, get trapped there. That's exactly what it is. So yeah, you got the answer. Greater the risk, greater the reward too, which is trading. Lesser the risk, lesser the reward too, which is job. Perfect. How to trade in Nifty? Is there any other thing that we can trade in? How to trade in options and futures using Nifty chart? Okay, how to trade in Nifty? You can't invest. You can't trade equity. Like how you trade your stocks as equity, you can invest. You can't invest like that in Nifty or Bank Nifty or any other index or sector. Indices and sectors cannot be a part of investment. You can't really invest in them for a very long time. Why? Because they are indices and sectors. They are a collection of a lot of individual stocks. So if it was possible for you to buy one stock of one share of Nifty 50, let's say, assume that you could actually buy one share of Nifty 50 and keep it for as long as you want. That is literally like you buying one share of all 50 companies coming under Nifty 50. Doesn't make sense. That doesn't make sense, right? That is why the only way to trade Nifty, not investment, trade not just Nifty, indices and sectors, is through your derivatives, futures, options. That is the only way you trade them. You really can't be invested in them. You can trade them through your derivatives, futures, options, all your indices sectors through your derivatives only. How to trade in options and futures using Nifty chart? Always, as I told you, irrespective whether it's futures or options, you are doing all your analysis on your mother chart. In this case, your Nifty chart, Nifty or Bank Nifty, whatever, your mother chart. You're doing all your analysis there, your drawings there. This is the low I want to buy. This is the high that I want to sell. Support, resistance. Everything is based on your mother chart. You are just using your futures and options as a tool to execute that trade. I'm not trading in the mother chart. I am just trading in the futures or option chart. Okay, so all your analysis, everything is on the mother chart, which is Nifty chart in this case. Done. Oh, this is also done. Sir, what will happen if the demand and supply is of the approx somehow similar? Then should prices go up or down? Okay, I think I know what you mean. See, if you're saying approximately somehow similar, that means it's not exactly, number of buyers, number of sellers, exact dot pinpoint equal. If that is the case, prices will be flatline. There won't be any movement at all. But since you're telling me, somehow similar, more or less very close by, slightly the demand is slightly greater, the buyers are slightly greater, the more than the sellers, prices will go slightly higher until that, as soon as prices demand greater, supply also came in. Immediately supply also came in. Equivalent supply came in. In fact, while doing that, supply became slightly lower. Again, prices will come slightly lower. Again, the demand came. So the movement of the price will be very, very less in this scenario. In this case, the movement, more the gap, more the difference between your demand and supply, greater the movement. Here, since you're telling me, somehow similar, not exactly same, but yeah, very close, then yeah, the movement will be very less. It won't be a flat line, but yeah, it will keep going up and down based on which is greater. But yeah, if it's very less, the difference is very less, it will just be a very small movement. Prices will be going in a sideways, sideways market. That's what will happen. Which time frame is ideal in market profile to trade with? 5 minutes or 3 minutes candles? There are no candles in market profile. You don't want to call them candles. I'm getting different levels with different time frame. Ideal time frame, standard time frame that everybody uses is 30 minutes. Okay, 30 minutes. Apt, perfect. Don't change. That is the default time frame also in market profile. When you go market profile, default time frame is 30 minutes, and that is the standard time frame. You don't need to change. As I told you in that previous, you don't need to change any settings, man. You don't need to change anything. Everything is what default is there for market profile is perfect. It's perfect. 30 minutes. Done. In that, you don't want to call it a candle. Yeah, basically if you set time frame as 30 minutes, what will happen is like A, wherever A is printed, TPO, right? That is the movement of first 30 minutes. Wherever then B is printed, that is the movement of next 30 minutes. That is what your time frame will help you there. Not candles. It's the movement of that. Each TPO which is being printed. If A is printed in so many levels, this was a movement of 30 minutes. B next 30 minutes. C next 30 minutes. That's what happens. Please explain stop loss again. I didn't get it. Okay. See, what is stop loss? Basically, it's a safety order. Okay, it's a safety order. Let's say that you wanted to sell here. You saw prices are taking resistance 1, 2, 3, again resistance, beautiful resistance. I want to go short here. I want to sell. I know prices will go lower. I want to sell here and then buy it back at a lower price when it is at my closest support. I want to buy it back. You want to short here. Okay, after seeing this candle, perfect. See, all this connected, and this time when this happens, beautiful, perfect. Okay, perfect. When this happens, it goes higher. Then you see an inverted hammer also coming from a very third time. It's taking that resistance. I see an inverted hammer. Next candle also, boom, breaks this previous candle's low also. Not just this candle, previous candle's low also broken. It has gone lower. I want to short definitely now. So you sold somewhere here. Okay, you sold. Your entry price became somewhere here. Now, what is stop loss is that I am expecting the prices to go lower. That is why I have shorted the markets, right? I have shorted. I'm expecting the prices to go lower. I have sold. What if the prices take a turn and go higher? What if the prices take a turn and go the other way? I don't want it to go there. So if that happens, where would I want to close my position? Would I still just keep taking losses? It keeps going higher. I want to just keep making losses. No, right? No. I want to cut off my position. Safety, stop loss. This is the maximum loss that I'm willing to take. Where is that? This is the high. This is that high. The high of this week, whatever price is there, 36,481 in mother chart. If you're trading in the future chart, whatever price is there, that will be your stop loss, right? Wherever you're trading, based on that price, your stop loss. So if at all I have entered here, but if the prices go against me, if it crosses this price level, close my position. That is you informing the broker. If it goes against me, goes higher than this price level also, if it touches this price level, close my trade. Stop loss order. So in this case, this will be a buy order because you have sold here. You have sold here. So if it goes against me, buy it here and close my position. Target. If not, you're waiting in the markets, you're waiting. It doesn't go there. It keeps coming down. It keeps coming down. Came to my support area. This was my target. This was my target. Support, it has come very close to the previous support. I am closing my, so I buy it here. So I buy it here. That's it. You sold here. You bought here. Trade closed. If you went wrong, you sold here. You, as soon as it reached here, you bought back. Trade closed. Stop loss, safety order. In case you are a buyer, after seeing this coming from support, you wanted to, you see this, you saw this candle, strong candle, you want to become a buyer, right? You want to become a buyer. So this low will be your stop loss. Sell order this time. I am a buyer. I'm expecting the prices to go higher. If it takes a turn and breaks this low and starts going lower, I would want to close my position here. I am placing a buy order there, which is my stop loss order. I hope now it's clear. Very perfect. It was very good session. My question is just using that trend line, support and resistance zone with much practice, can we be able to start trading right away? Absolutely yes. Okay, support, resistance, trend lines. Okay, see, even trend lines are what? It's your dynamic support resistance. Support and resistance is the principle of price movement. That is your base core. Before you get into anything else, this is something that you need to master and understand. Forget about mastering. To even understand the price, this is a way to analyze and interpret data. This is charts, it's a digital form of charts. I'm able to see market psychology, people's psychology in a digital form, with the help of these candlesticks. So I can identify this demand, and because the entire movement, if it goes higher, lower, if it's going higher, from a demand, from a support, coming lower from the supply zone, from a resistance. So it's support, resistance only, nothing apart from that. So definitely yes, understanding support resistance is the most important stuff, and definitely you can take trades solely based on your demand and supply. If you understand your support resistance, your 95% of the work is done. It's done. Is it possible to trade profitably every day or even at least 7 out of 10 days? If possible, then why there are not many traders who are multimillionaires? Okay, good question. Definitely, every single day I want to be profitable. It's not impossible. Wrong to even expect. It's wrong to even expect that every day I want to sit and make money. No, 7 out of 10, definitely you can do. Okay, definitely you can be right here. It's not something, since you asked me that if it is possible, definitely yes, it is possible. If possible, what I said, yes, it's possible. So if possible, then why aren't there many traders who are multimillionaires? How do you know that there are not many traders who are multimillionaires? There are a lot. Okay, 10% out of 100%, 10% are the one who are consistently profitable. That's the kind of efforts that you need to put to be in that 10%. It's not just anywhere, right? Anywhere. There are so many people who play cricket. In our country, India, especially in our country, so many people. Cricket, every single lane you'll find a cricketer, man. Come on. But what? Only 11 make it in the team. Only 11, right? You've got to be according. You have to put your efforts accordingly. Similarly here also, only 10% out of 100%, only 10% are the ones who are actually able to make consistent profits. Making profits is anybody can make profits. Not a problem. Consistently making money out of it consistently is very few people, and those few people are definitely multimillionaires. Okay, they are millionaires, definitely. Millionaire is what, man? Come on, 10 lakh rupees in trading, that's like nothing. Okay, that's nothing. Definitely yes. Now why there are not many is because of the same thing I told you. The trading is so much more than just trading, my friends. Trading is not just about knowing support resistance and I'm good to go. No, it is so much more than that. Your entire personality, your character, your level of discipline, your level of patience, all that put together is what makes you a consistent trader. I know everything, I know what to do, but I'm not able to do it. Getting it? I know what to do, I know exactly what to do, but my emotions get in the way and I'm not able to do what I need to do. That is where most of the people go wrong. I know everything, but I can't control myself. I can't control myself. I can't control my my greediness. I want to make money. I want to make money. I know that something is wrong here, but no, what if I'm right? I might make money. I might make money. Screws up. That's the thing that most of the people screw up. That is the part. So yeah, trading is so much more than just trading, so much. It demands so much more than just technical understanding, so much more. You need to understand yourselves and master yourself in order to become a successful trader. That is why everybody fails. Can I use these strategies in FTT Olymp trading? No, stay away from such platforms. They are not regulated platforms. Okay, they are not like your brokers and exchanges. They are all under a regulatory body, SEBI, RBI. Everybody is there. A monetary body is there, that looks over them. They are under some monetary regulatory body. These kind of platforms are, no, it's not even legal in our country. So if it's still operating in our country, that means it's outside of our purview. If something goes wrong, if that company chooses to screw you over, come, shut, all your money is gone, you will not be able to do anything, because it doesn't come under our authority. It doesn't come under authority. It doesn't, not under RBI, not under SEBI, not under the Indian government. Okay, no. So if they decide to screw you over one day, you're done. You can't do anything. And it's literally a game, man. It's literally a game. It's an app. It's literally a game that's just collecting data from somewhere, showing you that data, or maybe not even that. It's their own platform. I'm going to do what I want to do. I'm going to manipulate. Whatever I want to show you, I'm going to show you, man. As simple as that. Stay away from such platforms. Stay away. Binary trading, another word. This is called binary trading. No, stay away from it. Trade legally, make money legally, hassle free, tension free. Nothing at the back of your mind. You don't need to find such ways. No, this is crap. Never. Stay away. Stay as far as you can. Done. Can I do only analysis stuffs without trading for a month to identify myself without gain or loss of money? Identifying my skills and the market behavior? Absolutely yes, man. In fact, it's a very wise choice. It's a very wise thing that you have thought, that okay, I've really understood this. But just because I've understood this doesn't mean that I want to put my money right away and just start experimenting. No, I want to try out, just without putting my real money. I want to take some trades and feel like, whether I'm right or wrong. I want to understand. How do you do that? Paper trading. Okay, it's something called as paper trading that you can do on your trading view itself. You can go do it on your trading view itself, paper trading, or there are many platforms. Just go Google it, you'll find it. But yeah, trading view itself is there. So you don't even need to look elsewhere. Anything that you want to trade, you can do paper trading. They'll give you fake money, paper money, fake money, and you're actually thinking like, I have bought here, I have bought so many shares here, I've sold so many shares here, this was my profit, this was my loss, but you're not making or losing any real money. So you can get a feel of what trading feels like, and definitely not just a month. If you want, you can do more than that until you feel confident, until you gain that confidence that, yes, I can do this now. Definitely, this is a very wise choice to do, very wise thing to do as a beginner. Definitely, okay, without putting your real money, start paper trading. Good. What are the different bank nifties? Please explain the pattern of 14,500 level and many more. Please go through my question. This time it's a request. I don't remember seeing this question before, or maybe if I didn't mark it out because it doesn't make sense. What are the different bank nifties? There are no different bank nifty. There is one bank nifty. One bank nifty. That's all. There are no different sorts of bank nifties. Please explain the pattern of 14,500. My friend, bank nifty is at 35,000, almost 36,000 level right now. 14,500 now. Maybe you're talking about Nifty. Even Nifty is not at 14,500 now. It's at 15,000, right? It's not at 14,500. So Bank Nifty 14,500. I did not get you. If you're talking about different strike, if you are okay, what are the different bank nifties? Maybe you're talking about different strike prices, because there are a lot of strike prices. We'll get to it. There is another question. I think if you're trying to ask that, you will get the answer. But if not, I'm sorry, my friend, I did not even get this. What are the different bank nifties? There are no different bank nifties. It's only one bank nifty. And the patterns of 14,500, you lost me there. No, I'm so sorry. How to choose strike price after completing the technical analysis? Coming to that, like if that was your question, then yeah, let's discuss this now. How to choose strike price? Basically, this is for options. Futures, now you know that there is nothing, man. Okay, nothing. Absolutely nothing. I want to short here in my futures chart, February 2021. Wherever this price is high, I'm placing my stop loss and I'm entering wherever the price is. If this is my target, as soon as the price came here, I'm closing it in my future chart. That's it. Nothing apart from that. Very straightforward. When it comes to options, you got to choose the right strike prices, right contract more than right prices. Not more than, but yeah, both. Right strike price, right contract. Okay, contract also very, very important for an option buyer especially. Let's say that you are a buyer, you are an option buyer right now. Okay, you're an option buyer. You see the prices are falling, you want to short the markets. Okay, you're sure prices are going down, I want to short the markets. But since I'm an option buyer, where would I buy? Puts. I would be buying my puts because puts are inverted chart. Puts are my inverted chart. So if the prices are falling down in my mother chart, in my put chart it is going higher and I am an option buyer. So I would be buying puts. Which strike price? You would have noticed in the video also I told you, stick to right where the money is at. The best advice that I can give you as an option buyer, as a day trader. If you are a day trader, stick to where the money is at. You don't need to go anywhere else. Right now when this happened, I wanted to sell. I was somewhere in this region. Okay, somewhere in this region. What is this? 36,300. I am quickly opening my sensible, my option chain. I will come 36,000, 35,000. 36,300. Okay, 36,300. I quickly come and see, assuming that is at that time it is at the money. Okay, think like 35,800 right now. This is your at the money strike price. Right now, prices is right there. I am just going to come here quickly and choose one here, one in the money, at the money, or maybe one out of the money strike price. Out of these 2-3 strike prices, I'm quickly going to do the math here. What is that math? I'll show you. Before that, this is your today's, see, today was expiry, 11th Feb, right? 11th Feb, today was Thursday. It was expiry. See, all out of the money calls, worthless, 0.05, 0.05, all worthless. All out of the money puts, worthless, 0.05, 0.05. Everything worthless. All out of the money, worthless. Such is the nature of options at expiry. All out of the money contracts expire worthless. See, 0.05, that is where it is ended, worthless. Let us go to the next week's contract so that we see some data. There will be nothing here. Looks good. Yeah. Let's see. Delta. Good. All Greeks also on. We have everything here. Now, assuming that that price was 3,500 right now at the money strike price. Prices are here right now. I'm just going to come here quickly, open my option chain and see here. Out of these 2-3 strike prices around my at the money, I'm just going to come here and see what the delta is. What the delta is and what the price is. LTP, last traded price. Your current price, your premium value of this particular strike price. This particular strike, 35,800, 18th Feb contract, 35,800. This strike price, premium value right now is 550 rupees. This is what it tells you. So I'm going to come and check here that at the money it's 550 rupees and I'm getting 0.51 delta. 51% move I am going to get here. And then I see that from 50 to 599, if I pay 50 rupees more, I am getting 3% extra move, 3% extra, 0.54. If I'm willing to pay 50 rupees for that 4%, 3% additional, go for it. I'm just paying 50 rupees more extra, but I'm getting 4 to 5%. If that is the case, 4 to 5% extra move I'm getting. Definitely I'm going for it, or out of the money I go that it's